All right, welcome back to the channel. We're going to be going over the S&P 500 and the Nasdaq 100, specifically what is happening on this market right now. Now, going into yesterday's video and any of the lives that we've done over this weekend, the primary focus here on the charts, we were looking at the structure of how we've been moving up with very slow decreasing volume if we're looking at the Nasdaq specifically, which has been one of the big leaders on the market, and then the S&P. Now, we know month over month, S&P has essentially for the last 3 months been the leader and the Dow. Now we have seen this start to turn, if you will, and so we need to start looking at this as well. Now, a few other news things we are going to be talking about here, and I'll probably cover that first, is going to be the debt ceiling and really what's happening with PPI, and that will be tomorrow morning. So have that marked in your calendar. An hour before market open, PPI will be live. Let's dive right into this. Now, before we go too far, I have to ask you to consider doing two things: like and subscribe. Every single day I'm posting videos for you so you're prepared on the market. Try to keep it as unbiased as possible so you can see both sides of the possibilities, and ultimately where news, fundamentals, and technicals point us in a direction. That is the basis of this channel. Also, the Twitter link is down below to get updates throughout the day, but again, I don't want to waste too much time. Let's get back here. So when we look here at the charts, a few things I do want to highlight before we dive too deep. On the Nasdaq, key levels we're looking for. One, we have the 200 moving average on the weekly. This is the weekly 200 moving average. We don't care about the 1 hour, the 2 hour, 4 hour, 30 minute. We care about the big picture. That longevity is what we're looking for as we look here, okay? So when we're going through this, we want to talk about some big levels. Now, the 200 weekly, what happened here last time? Now, we can see previously, we go back to roughly January. We saw January 12th, we got rejected, pushed back above, mounted here, 2 touches, and pushed back up. So far we still look good. If we look at today's movement to some of the downside that we had, we bounced there once again. This is not going to be an easy level to break, so we need to understand that. If we go back just a little bit further and we can look about what happened here, November basically through mid-December. We broke above, held that area. So this has been a very big inflection point when we're looking at the charts. We're going to go into ES here also. I do want to highlight, I don't like to go back on anything we've looked at, so I want to highlight things that's basically been happening. I posted this on Twitter last night as well. I mean, in my opinion, I still think you're in a clear-cut ascending wedge. It's getting tighter and tighter, if you will, here. So you have to be paying attention to what's happening here. You could argue if you bring this to the absolute bottom that it's kind of broken structure and you're getting back into it. But again, this is what's happening in the overall structure of what we're looking at here. Now, when we take a bit of a deeper dive into something like ES, the S&P futures, I think you get a few more answers. But what I want to do, instead of looking at the weekly, is looking at the daily. This is a little bit more relative. And I also want to pull up the 100 because that's been pretty big here. And as we look at this, again, we're going to go to about the 4-hour time frame so you can see. We had a push above back in December. We got pushed back down. And really, if you want the best visual, you can go to the daily chart to get, overall the structure that's been, happening here specifically. And when you look at what's happening, it's not the most beautiful thing here on the daily. So what we're going to do is bring up the daily 200 and the daily 100 right there. And as you can see, so we can see basically going from that November to December push, we played ping pong back and forth between the 100 and the 200. Going back previously, even further than that, in August, that last rally we had there ended right at the 200 moving average. Again, pushed right back below the 100. And if we look where we're at right now, you could argue it's starting to look similar to the movement that we had back here in November and December, where we mounted, had some red days, and then closed back below. Now, again, I'm not giving a timetable and of assuming when we get a drop or get a dump. I'm overall just giving my viewpoints here on the market and some key data points that are coming here also. So when we look here, again, everyone knows I'm established into a Q put position, so I'm expecting Qs and the Nasdaq specifically to go back down. I don't think tech has bottomed. However, we have moved really good structurally. I'm not going to lie. Over the past few days, give or take, we have been making higher lows and higher highs. So we have to acknowledge what's happening there. Today being one of those days. So again, these are just things that we have to look at. But on a broad scheme and looking at what's happening over the past year, still a year-long bear trend. We're at the resistance. The question is do we finally break out? And if we look at fundamentals, that's where I come into my short position. So a few things about what's happening this week and going forward. Now we've gone over CPI. Now we have to talk about what's happening with PPI. This will be tomorrow, just so you know. Basically, last month, this was one of the surprise months that we did have. And you started seeing PPI, it actually had a beat. This was kind of a bad day for the market when this happened. But then CPI had a pretty big outlook were very soft when we're looking at the market, and it was definitely a cooler going into that. So very strange that we saw PPI have a beat, and then, or at least a beat to the upside and continue to grow, and then CPI to the downside. Definitely something that we're not used to seeing here. So when we dive a little bit further in, this will be important. Not only are expecting PPI to come down lower, they're expecting it to be one of your biggest drops potentially in the past 24 months, give or take, right? They're really expecting this to be a big drop, okay? That's basically since August. That'd be the only equivalent to the drop that you've had recently of that size. So month over month, I definitely want to keep an eye on PPI. That's going to be a big thing here. A little bit further, we're jumping in. This was announced from Fed Barkin today. And again, I don't really agree with this statement as far as my expectations on when they'll start to pause. But Fed Barkin said today to pause, basically talking about rate hikes. Inflation must be convincingly back to target. So is that in line with their 2% target? That's the real question here. And I don't think they're going to raise rates continually. That just doesn't make any sense. And that would cause them to overtighten. So again, this is not what Powell is saying. This is what one of the Fed members are saying. They all have different opinions. And this goes just to show you. But I will say this was a terrible statement that what he said. I mean, this definitely, if true, would be incredibly bearish for the market, because you would anticipate they would keep raising rates 25, 25, 25, essentially till the end of the year, because I don't see a 2% CPI or 2% print on inflation coming out anytime soon. Things you need to consider there. Now, as we look at the debt ceiling, this is the big question. So a lot of people have been asking about my opinion here specifically on the debt ceiling. Now, going forward out of this, I think we have to ask a few questions. When we're looking at the debt ceiling, what happened last time? Now, I personally believe we're not going to just let the market default. I just don't believe it's going to happen. Maybe it does, maybe it doesn't. But the key thing here that's different from, the last time is that now it's not Democrats and Democrats with Senate and the House. Now we kind of have a split majority. And Republicans are definitely battling here. And all day today, if you've been watching the news or listening to the news or reading the news, then Biden had a few choice words to say specifically to the Republicans. He said he was not going to battle them and it would not be a negotiation, saying basically it's his way or no one's way. Now, this leads us into, some sticky territory because he's actively negotiating as we speak. So is he just all bark and no bite? What really happens from this? I will say though, I may have underplayed this going into yesterday. I really just assumed that we'd figure this out. Because I just don't think this will be the black swan event to really crush the market right now. However, going back to the last debt ceiling meeting that we had, that was a big issue. We had to raise it. The SPY did drop about 7% in that short 2-day time span. Worth mentioning, could be pretty bad. So definitely keep that on your books, something to be looking at. Now, again, I personally, my belief, I think they'll resolve this, but if they don't, would be a catalyst towards the downside. House Republicans are really trying to fight this, and you do know back and forth they've been going because House Republicans are trying to abolish the IRS, and basically Powell said he will veto that, and so it's going back and forth of just like the one wants their way, the other one wants their way, and they can't agree on anything, and I think this is could turn out to be worse than I expected. I definitely think this is the only part of the news that I've underplayed, and I think that we need to keep all hands on deck watching this. Again, PPI is tomorrow morning also, and we saw what happened the last time that missed pretty bad. This is kind of stacking on top of each other when we look at what's happening with inflation, specifically going back to that CPI report. These are all things we have to be keeping our eye on. Definitely some pretty big news coming out over the next few days. So when we come back in here, a few things I want to look for. If we look at today, specifically, we're going to go really quick into some intraday timeframes, go back to the 5-minute, turn off our indicators. And I just want to show you what's happening on the day. Basically, we open up at around locally at 8:30 at around basically 11.6. You get a little bit of a drop and an immediate push up to almost 11.7. I assumed this would be the chance to get my final entries into my Q positions, right? I've been saying 11.7, 11.8 is where I want to establish the rest of my Q position for the short side. But we didn't get it. We got hit by a brick wall and then came right back down. Again, this leads me to my question. If we're looking at what's happening on the market, again, we go back to any other case of any other bounces that we've had. We've seen very much continuation based on volume over and over and over. If we look at what's happening here on volume, and again, I just want to give you an example. Again, I always recommend using Yahoo Finance because it's extremely easy to see the volume and it updates pretty quick. So if we're looking at SPY, we come down really quick. Right now in the after hours, your volume is pretty much done. You have a 61 million day. Just so you know, this is your volume on the day on SPY. Your average 30-day volume is about 81 million. So you're coming in 20% below that, back to back right now. So looking at this definitely calls for concern, especially that's a low end volume that's keeping us afloat. Again, we always want to see high volume kind of turn the table, and we haven't seen any real high volume. The highest volume we saw was this 100 million day that printed, really making that sharp bottom that we had on the low of 379. So that was good, but I'm just saying there hasn't been aggressive buying on the market to make me believe a bottom is really established. Again, this is just my opinion, what I'm looking at here specifically. If we start to break over some key levels, I could get behind it without the volume, but right now it's still all things point towards downside. But again, if I'm looking at downside positions, I'm not looking short dated. I'm not looking for a week, 2 weeks, 3 weeks, or even 1 month. I want to have 60 days on my positions. I'm going for March 17th. That's ultimately what I'm doing here. Now, again, not financial advice, but I'm just looking at the risk to reward across the board. I'm not trying to make an absolute home run or hit a grand slam, getting something and timing the exact drop and making 500%. I'm going more on the swing side of things, taking a little bit less risk associated with this, but also setting myself up for success in the long run. So that's my goal, that's my strategy, and ultimately we're still moving in a good direction. So we come in today, get that sharp decline, come down, kind of break down a little bit more, and we're moving sideways. Ultimately, one of the worst moving days that we've had probably in the last 2 months. Basically, we had that upside move, and the rest of the day we trended in a 20-point range on the Nasdaq. Now, what I will say is the Nasdaq is 100% leading you right now. If we look at the S&P, look at SPY, what's happening here? You made a new low here at the end of the day, basically. Oh, no, you did not. You almost did, very close, and then you bounced. If we look at NQ, you didn't really come close to making a new low in the day from that big drop we had this morning. So I will still say tech is trying to hold up. It is doing its own. It has earnings coming up. It's trying to. ES doesn't look as good. A little bit of a dive into Dow also. And we do know Dow has been leading the market essentially for the past 6 months. If we look at the Dow compared to Nasdaq, compared to anything else, this has to be your big question mark right now. So we can see Dow obviously made a nice bottom down in October in comparison to everything else and never turned around. Although you've had pullbacks on ES, on Nasdaq, Dow continues to hold up. Even with that kind of drawback we had in mid-December, Dow made a bull flag, broke up. So if we look where we're at now, you're at this previous swing high that you had all the way back in last April. You can see right there. And then we come in a little bit closer. We're going to go to the 1 hour chart just to give you a better visual. You can see we're sitting on that level right now. Now, taking an even further dive to about the 15 minutes, see intraday action. In my opinion, it was a clear-cut bear flag. You broke out of it with some volume, and now you just ended the day there. I do believe PPI will be very important. If we look at the prices of commodities also rising, this will also be very, very big as an inflection point in the market. We just had Morgan Stanley came out and say the area of the market that has the most strength or most potential this year is going to be commodities. That's not just oil. That's not just energy. That's steel. It's gold. It's more. It's very broad, right? Because if we're looking right now, the companies that are still producing, doing the best, have been down based on earnings. So again, to fuel those, to do what they got to do, you have to assume commodities as well, rising in prices will affect these. So looking at this after the day that comes out from Morgan Stanley or JP Morgan, whichever one it was, definitely a cause for concern for myself as we're looking at this. So again, a lot of things to be taking into account today specifically. But I'm going to give you a few trades, a few stocks that I'm personally liking in the market, things that I'm looking for in the short term, and some good setups, hopefully. Let's get to it. Now, I'm going to tell you off rip right now, banks are probably one of the weakest sectors in the market. Goldman had their earnings, and they're pretty brutal. We saw them basically miss across the board. But the biggest thing was their outlook on the market. So again, like I was saying in Friday's video, we can't really trust some of the things that we're hearing from these earning calls. Some will be very honest, and some will just beat around it, trying to benefit their stock price as much as possible. And we saw this happen today. So today you saw Goldman come out, really did bad in earnings, and they really just told you what was happening on the market and overall expectations. Kudos to them. JP Morgan, if you remember, and Morgan Stanley also had earnings, and they kind of gave you pretty good outlooks. But things happened and changed today. Big areas they covered were consumer spending and the market outlook with demand. They acknowledge that they see a decline happening across the board with both of those. They also mentioned that they do see consumer delinquencies rising. Now, this is kind of a go figure just because it's been so good in the past few years, but it's worth mentioning they see those rising and they see the amount that they're going to make off of consumer debt to go down, which in theory you would assume it would go up based on inflation prices rising and based on what's happening with interest rates rising. You would assume that you would make more on that. But again, factoring in delinquencies, this is where this becomes an issue. Okay. We also acknowledge Goldman did last year was the highest ever household fixed income rate. So if you were in a single family household, dual family, whatever it may be, it was on average your highest across the board of fixed income. Again, this is acknowledging, even though demand is dropping into the end of the year, okay, we're still looking at what's happening big picture with the market. And as we see this happening, it's showing, banks are showing this isn't as good as we thought, okay? It's finally coming to a brick wall. So Goldman's viewpoint was not very strong. It was not very good. And then we also saw more layoffs coming out across the board. So looking here, I like Bank of America. This is something we mentioned here in Discord. We mentioned it on live also. You get a slight breakup, but I still think it's extremely, extremely weak. I'm going to show you really quick the ETF XLF just so you can see also. So I think banks in general, it's just very tough territory to be in. And I think you might hit a brick wall here. So we can see going all the way back, you did break over this previous supply that you had, but I still think it's a major resistance, this area we're sitting at. So it's not a supply, but we do have to acknowledge the strength and resistance as we come into this area. So XLF as a whole, JP Morgan, Goldman Sachs, Bank of America, Citigroup, the list, Wells Fargo, the list goes on. So I like all of them basically for downside. Bank of America is one of the safer plays in my opinion, just because they're cheaper. You can go further out. I like them a lot. Wells Fargo, again, they showed some strength on the day. You dipped, bounced back very aggressively, but we saw a lot more puts coming in on Bank of America, which made me more of a bear on them. So that's why I favor them towards the downside. Okay, that's my personal opinion. If XLF gets above that key range, I would just ditch them, would not be interested. Going a little bit further, looking at something like Tesla. Tesla was really interesting on the day. So we're finally seeing some love on Tesla. This definitely caught my attention. Going to something like the 1 hour chart, you can see basically we just went up all day. Even while index is chopped, even when we got pullbacks, Tesla remained strong. We can actually see we broke high a day. Once we broke it, we basically held it for the remainder of that day, right? So 130.5, held it, looks really, really good. Like Tesla, I think it has upside to around 134, 135 to there. Then you're stepping right back into resistance and you're kind of coming right back into this little bit of a range. Next up, semiconductors. Again, you're going to notice that some of these stocks, even though I'm bearish on the market, some of the best plays look to the upside, okay? Now, again, I'm not going in and just going long on stocks at the top. But if we look at what's happening here, again, Jay Ream runs a Discord with me. He's been a big advocate of semiconductors. If we look at what's happening here, I think it's very hard to not like what's happening with the semiconductors. So specifically going into the ETF once again, this is where you get a lot of your answers. You can come back out of here, go about to the 4 hour chart, and we can see you look really good. You're trying to get the breakout. Massive inflection point here. I think what you have to do here is be watching these ETFs. They're going to give you all the answer. SOXL is another one. They're all ETFs regarding, semiconductors. I think you have a little bit more room up here. I think you have room up to 13, 14 close too on SOXL. So food for thought, keeping your eyes on these. NVIDIA still has a lot of momentum. Volume's been flowing in. So as long as you have volume, you want to keep this on your radar. Again, I think you could easily hit 180. But again, what you're looking for to be a bull, to trade the upside, you want to see you get volume into SPY. Again, this is where all my trading take place. I come centralized and I'm focused on SPY and the Nasdaq, right? Once I see a clear-cut direction or once I can decide if I'm bullish or bearish on those specifically, then I'll move into my equities. And that's when I think the money opportunity is there. NVIDIA's had great volume. I think it could easily continue, again, up to the 180 marker. But again, you don't go blindly into NVIDIA. You have to watch the indexes behind it. That's the clear-cut answer there. Next up, Microsoft. Last trade probably of the day going on here. Actually, I have one more for y'all. But Microsoft, you're coming to 240. You've had great movement over the past few days, and I really just want to give an update here on Microsoft. You're really trying. You are trying to break out of this. This is why I keep saying, NQ, how you're moving doesn't make too much sense. Equities are moving great in reality. I'm going to give you a view of the big six here in a second. You're getting great movement on equities. But the Nasdaq in general is kind of just holding stagnant and sideways. It's every time it pushes up, it gets pushed right back down. So it's really annoying, and you can't make a clear-cut answer. And it also tells me that big money is not making a clear-cut decision either. So when we look at this specifically with NVIDIA, or Microsoft, I'm sorry, if you can really hold and break local highs around 241, I do think you could try, again, you could try to get a big push up to 243, 244.5. So again, even though my viewpoint over the next 2 months is downside, when I'm looking to take some of these scalps, I really do want to play the upside. Very few sectors have me that bearish looking at them just from a technical point of view. And again, if you get downside immediately tomorrow from like bad PPI or the debt ceiling, most equities will drop. Okay, those won't be a buying opportunity, right? So you have to understand that. So again, when you watch these, don't just say, oh, well, you know, we didn't move directly up on NVIDIA or Microsoft, or I didn't get a signal what to do. I never really knew what to do, right? But when you come back and you look and you focus on the key parts, the SPY, Qs, Nasdaq, ES, then you'll also know when is the time to enter, right? It's not as simple as finding a cool time frame, a cool chart, a cool pattern. That's not trading, right? That's just trying to palm read and look at what's happening on a chart. You got to look at the fundamentals, the technicals, and also the underlying values of what's really moving this market. Last thing I want to mention is going to be Apple. I actually saw someone on Twitter post, I think it was Bracco, and it was an interesting point of view. If you're looking at what's happening right now, possible, very possible that you try to double top in this region here, okay? You can take this all the way back over here. What I want to do really quick is go to about, let me actually get rid of this for a second. We're going to go really quick to the 2-hour time frame and look at the supply that you kind of have formed right here. So you can actually see, again, you are making the supply zone right here. You made it on the big drop that you had previously. It's right there, and you're coming into it on Apple, right? So I like Microsoft, I like NVIDIA. Apple, not a huge fan of it. I do think Apple does not look as good. Few things that make me not like this from a fundamental standpoint, right? We already know the demand is dropping, production is dropping, everything's declining. That should make them thrive. And the things that are declining in demand from their products are their highest producing products. When it comes to AirPods, it comes to their iPads, their MacBook Air. These were some of their biggest sellers last year, and now they're reducing production. Cause for concern. We also saw the CEO take basically a 50% pay cut, but that could just be just to help the company in the short term. So I don't want to take too much mind to that. So I definitely want to keep that in the back of our heads and not, you know, just run with it and say, oh, well, this has to be bearish, right? So to make sure we understand that. So basically up to about 136.5, up to 137.5, big cause for concern. Going to 138, this is also a very major level. I want to highlight this 138 level is huge. It goes all the way back to your swing high of 2020 of August. Very big level. We've seen this get rejected and mounted multiple times. So not only are we entering a supply, you also have a very massive key level here. So Apple, I'm looking for this to get rejected. So few plays, good opportunities, things I'm liking on the market. Nothing really for swings. When I'm going swings, again, that's just my QQQ position to the downside set for March. But these are some good scalping ideas and setups for the market. I'll see you tomorrow.